And good morning, everyone. John Hutchinson and Jeff Wood at Traders Reserve. Welcome to Breakfast Club this July 21st, 2025. A lot to share with you today, so we will get right to it, starting with our weekly income report from last week. And just make sure we got everything working. Good. Off we go. So combined, um, a little bit of a mixed bag in the sense that Income Masters was much slower in closing trades, as we sort of talked about last week, this caterpillar effect, where weeks in between data seem to be the weeks where we get more closed trades closing, and those big data weeks, which are moving the markets, tend to be where we stack up a bunch of trades, which we then close the next week or the week after, et cetera. So a little bit quieter in Income Masters last week for closed trades. But Millionaires Trading Club, in its second week of daily program, was very active, and we'll review that here in just a minute. But total closed trades, 11 for the week. A little over $2,300 in net income, 30,000 capital on that, so a 13.6% return for the week. For Income Masters, we closed one trade, and it's a good trade as an instructive point. Because it was a trade which dated back to March of this year. So we were in this trade for 118 days. It was a recovery position where we had an initial trade on Costco that went against us and had to manage our way out of it. And the lesson here is, and it's something I've explained or explored in the past, and I think it continues to be the case, that the most difficult question to answer for any trader, not just us, any trader, is when do you commit to saving a trade, and when do you commit to just ripping off the band-aid and closing it at a loss? And to be blunt, because you'll never hear this from anybody else, there's never a black and white answer. But if you lean toward working to save trades where the fundamentals of the company are in your favor, the company's, the company has the right kind of economic or earnings and sales performance. If there's a good reason for the trade, that can be a sort of a leading indicator to a trade you want to try to work back. On the opposite side of that, if you have a trade where something's just gone badly wrong with the company, they reported poor earnings, et cetera, that might be a trade where you look to say, how much can I recover, right? And then how can I get out of this trade? So this Costco trade, dating back to March, however, was a good example of a company with strong fundamentals, a good core reason to own Costco shares, not shares, excuse me, to trade Costco. And an overall strong fundamental performance. It was a short-term move against us, but we kept working this trade back. It took us 9 total rolls across the 3+ month period. And so from March to July, we just kept stacking up net credits or using net credits to offset net debits for rolls, and ultimately closed the trade for a $500 profit. Now, nobody's going to retire on that one trade, but it's a lesson in when not to be in a hurry to give up on trades. So for Income Masters, that one trade closing out for a $500 gain, 9.3% return on capital for the trade over the 118 days. We're not going to write home on that one, but you know what? It's nice to be able to, over the last couple of weeks between Domino's Pizza and Costco, we've been able to close out some longer term positions, both at profits. I believe Domino's Pizza was a little over $400 last week, right? And this past week, 2 weeks ago, and this past week, Costco. So look, we'll see what happens this week in Income Masters. Hopefully a little bit stronger on the trade closing side. We did, however, book forward income expectations of a little over $1,000 for last week's trading. We opened new trades in the IWM, that's the Russell 2000 ETF. United Airlines, as both United and Delta have stronger earnings expectations, excuse me, and We made a new trade on Costco, Affirm Holdings, and the XME. That's the spider for metals and mining. Spider ETF. So 5 new trades placed. Total initial credit for those new trades, $3.10, or $310 per trade, for the 5 trades, excuse me. We also rolled a significant number of positions. Some of these are longer term positions as part of our perpetual income approach, and some of them are positions which we continue to work to recover, similar to the Costco trade we just walked through. So CCI, Crown Castle, Occidental Petroleum, Facebook, Meta, Network Appliance, CF Industries, VRT, Vertiv Industries, and Netflix were all rolled in last week's trading. Our total net credit for those rolled positions over $7.80. So combined $1,090 in forward income expectations. We're not going to keep all of it, but if we're in the 60 to 70% range, that gives us solid credits built going forward, so forward income expectations. Turning to the month-by-month results, July is off to a spectacular start. I mean, 3 weeks in, a little over $4,500. Just added the $500 last week to see what we close out this week. But Income Master's having a very, very good month. On the Millionaires Trading Club side, completed our 2nd week of the new daily program. This is clearly where the action is as we closed 9 trades for the week. We'll take a look at one of the symbols that we're trading in a couple of slides here. 4 of those trades last week closed in one trading day. That means from one day to the next. Average time in trades for the new positions that we had put on in Millionaires Trading Club was 2.3 days. So that is our objective: faster, more aggressive income acceleration. Average contracts per trade, just over 5, so between 5 and 6 contracts per trade. Average capital per trade, about $2,700 for the trades that we had in place last week. So not, across 9 or 10 trades, you're talking about less than $20,000. So it was a good week for us in Millionaires Trading Club. We did close a loss in Berkshire B and the BRKB shares. That's a trade which dated back to our May event. We lost $736 total. That was a 65-day trade. And then we opened new trades in Nvidia, AMD, Advanced Micro Devices, AMD, Taiwan Semiconductor, TSM, IREN, and RUT, the Russell 2000. Russell 2000 being one of our absolute go-to trades. Jeff, you'll have to remind me. I believe that IREN trade is yours, and I don't remember what that company is. What is IREN?
IREN, they're in the crypto space. They do crypto servers and just in short, they're in cryptocurrency, which is absolutely taken off recently. And there's new, crypto legislation and everything else. So I know it's your favorite, but it's a stock that made us potentially had an 8% return in one day. So I was happy with it. We're still in it though.
If you're having any audio issues, you can either use the Zoom link, which is posted right at the top here. We put that up, or make sure that your video screen is not muted. If you scroll over the lower left corner of your video screen, you will see a little audio button. If it has a line through it, it means your audio is muted. And just click that icon, and it should unmute your audio. Carrying on then, so 10 total trades closed. The average days in trade is just for the new trades, so I'm not accounting for the Berkshire B, just because of the differences in the programs. So as we go forward, actually, we now have no open trades dating before or prior to July 7. So all of our trades going forward for Millionaires Trading Club will be the current trades. So that's good news. So total capital for those 10 trades, 28,744. Net income for the week, 1,816, and a return on capital for the week of 6.3%. Over the last week, we have been trading the Russell 2000. You can see here 5 trades, 5 times we've traded it. The first few times, first couple of trades there were 3-day trades. And the first entry on July 8th, exiting on July 11th, turned around and traded it again on July 11th, closed that out on July 14th. And then last week was just a bevy of trades. You can see the July 14 closing July 15, so a 1-day trade. We put on another trade on the 15th that closed the same day. I was not expected, but it just worked out that way. And then put on a new trade the next day, which closed on the 17th. And then we put on an additional trade on, I believe, Friday, which we'll probably look to close out here today or tomorrow, depending on the market action. But across those 5 trades in the month to date, over $1,760 in net profits. We're trading an average, I believe, of 5 contracts per trade on that one. But the Russell has become one of our go-to indexes to trade in the Millionaires Trading Club so far. Absolutely generating some very good performance. So don't be surprised to see us continue trading the Russell as we go forward if you are part of the Millionaires Trading Club. Income by month. I have reorganized the data here. Originally, our tracking was based on the events and the month that the event took place in, not the month in which the trade was closed for a positive or negative result. So in January, we originally had January listed as a $113 profit, but that was from a trade which actually closed in February. So I've just reorganized the income here to be consistent with the way that I'm tracking it in Income Masters. So for the month in July so far, since we've transitioned to the new daily format, over $2,900 in total income, $9,300 on the year. So there's a quick acceleration in our results. You can see the last 3 months, May, June, and July, all have been over $2,000 per month. The May was a multi-day event. June was a 1-day event, but many of the trades that we opened in May closed in June. So between the 3 months alone, over 9 accounts for most of that $9,300. And we'll see what the rest of this week brings for gains. So Jeff, if you're ready to get people set up for the week ahead, let me stop share and turn it over to you.
All right. I am. Let's do this. Or at least I think I am. Where's PowerPoint? Come on. Of course this is going to happen. Hang on. I'm in presenter view. Where is the... Here we go. All right. Good morning, everybody. You should now see a screen that says something about earnings season. Okay, so just want to get you ready for the week ahead. I'm going to try to do this very quickly, although we say that every Monday and somehow we still end up being 30 minutes. But I'm going to try to do this in about 10 minutes. Over the next 3 days, I've actually only identified, since we are going to meet again on Wednesday, I've only identified the stocks that have earnings Monday, Tuesday, and Wednesday. So I guess I could have done it over 2 days. Anyway, over 110 stocks are giving out earnings. So that includes big names in wireless like AT&T and Verizon, beverages like Coca-Cola. We have energy stocks. Let's see, what NextEra Energy is down here. We have travel with Southwestern Airlines. We have Enphase Energy. A couple of other big names, at least in the Detroit area, General Motors. And then of course, Google, Tesla, those are 2 of the main Mag 7 stocks. So should be a fairly interesting week as far as earnings go, and then depending on how the market responds to that. Now, the always fun part about earnings, that most people know about if they've been trading for a while, is then you have companies like Netflix that reported last week. Netflix guided higher. Netflix beat out in revenue, and yet their stock fell about 5%, looking to recover, but still always kind of a fun time to trade around earnings, and you never know what these earnings reports will do to lift or sink the rest of the market. So
Wouldn't worry
Just
too
got it.
much about Netflix though. The
No, no,
main
no. Yeah, that's not. Yeah, that wasn't my point. Yeah,
no, that's okay. But it's a good point to make, because some of the things that we're seeing already taking effect or taking place in this earnings season are companies sort of giving a better explanation of forward guidance. And for Netflix's case, it was the investments that they're making in core programming due out in the fall, and that programming is part of the reason, not the only reason, but part of the reason that Netflix has been outperforming over the last 2 years. So uh, Reed Hastings, CEO, basically said they spent more money on production, or they're spending more, and that will impact earnings in the forward quarter, but that will repay itself with subscriber boosts and advertising revenue in the fourth and first quarters, forward beyond that. So that 5% move lower in Netflix's buying opportunity, as far as I'm concerned.
yeah. Actually, still bullish on that. I just think it's an interesting thing if you don't read through the if you don't read through the transcripts, then you might just see like, oh my gosh, Netflix is down, economy down, whatever else. But in that case, it wasn't that at all. Anyway, so my point is, you just never know what earnings will do to the market as some of the bigger names come out. Okay, so speaking of economic calendars, aside from earnings, the good news is if you look at this compared to certainly last week or some of the other previous weeks that we've had, this week, not that much. We do have Powell talking tomorrow at 8:30, and then unemployment claims, which are our normal unemployment claims weekly report on Thursday, and then flash manufacturing PMI, flash services PMI. Again, these don't tend to move the market that much. I think some of the economic reports that used to move the market are sort of falling out of favor to other news-related items that can move the market. So certainly if you are day trading or into zero DTEs, you want to keep track of the times of these reports. But I don't see anything here that's really going to move things one way or another. It's certainly not more than earnings or some of the other daily surprise news stories that come out. All right, so what is trading higher for the last week? So this is a very simple scan. This is just top performing stocks sorted by 5-day change. These are all companies that are outperforming the market, being the S&P 500 year to date. Volume over 1 million shares. They have options because that's what we're all about here at Traders Reserve. And then, yeah, so there was more than 513 companies that sort of fit this scan, all within the New York Stock Exchange. Is only able to do a screenshot. I think this is, yeah, sorted by the highest 5-day percent change. So some of the ways I don't, there's a couple of different ways that I like to look at this, and why I look at these Sunday going into Monday is that a 513 stock watch list, which is quite a bit, but I can sit there, take these companies and then put them into a separate watch list and then start looking for specific option setups on these. So if you're a bull put spread trader, then you're gonna take this as a watch, create a watch list, and then go from there. You can be a long stock trader, all that sort of stuff. But the reason I look at 5-day change and year to date versus the overall index is I want to see companies that are outperforming the index. You never know what's going to happen. Next week, they could all of a sudden not outperform. But companies that, 6 months into or 7.5 months into the year, if they're outperforming the market, then there's usually a good story behind that. And then as far as momentum goes, now, you do have to look at this. I wouldn't just say like, oh, STEM is on the list, I'm going to go ahead and buy this. I don't know if this is a gap up. I don't know what happened here, but it's a list of stocks, because I tend to like, there's pullback traders and then there's continuation of momentum traders. And I tend to be a little bit more of a continuation of momentum. So I like to look at stocks that are already moving and then see if I can ride that a little bit longer, especially if we're doing short duration trades. All right, and then what is hitting potential support? So if you are a little bit more of a pullback trader, there's a couple of different ways that you can do this, but I thought I would, I'm trying to give you so much value in these free sessions every Monday. So decided to run a different scan looking for a pullback. And so in this case, what I was looking for is stocks that are still above their 200-day moving average, that are pulling into their 200-day moving average, stocks that are below their 20-day moving average, meaning if we hit a bounce off of a 200-day moving average, they still have room to go because they're currently below their 20-day moving average. So we're not overextended on the high side. This is definitely a pullback. And so what was interesting about this list, not too many actually fit the criteria that I was looking for. But what was interesting is CVS showed up here year to date versus the S&P 500. It's outperformed the S&P 500 by 30%, which is just odd considering where CVS is. And I'll look at a chart in a second, or just thinking about the kind of company that CVS is. You wouldn't have guessed that, or I wouldn't have guessed that that would be one that's outperforming the market that much. But yet it finds itself right near its 200-day moving average and currently below its 20-day moving average. So I said, well, okay, well, if it crosses below the 200-day moving average, I want to be out. But whether it's a 50 delta, 30 delta, 15 delta, whatever it is, I said, okay, what if we put what if we sell an option right at that 200-day moving average or just below the 200-day moving average? Again, if it crosses below the 200-day moving average, I want to be out of the stock anyway. And this is just a one wide spread for 1 week. This expires on Friday. This is pre-market pricing, so we'll see what happens when the market opens. But this is offering 20%, a potential 20% return on a 80, well, really $1 risk, but it's $1 minus 20. So it's 20 cents on 80 cents. And again, 20 cents doesn't seem like a whole lot with commissions and whatever else. You just up the number of contracts if you want. But more importantly, that's a 20% return in 5 days. Selling an option that's below the 200-day moving average. So we'll go to the chart really quick. Again, this is not a recommendation. We're not following this or anything like that. It was just more of a teaching opportunity that I thought was kind of fascinating. This is actually where the calendar year starts. So we were coming off of a low for CVS. CVS was around $43. It's currently around $61. So a pretty nice size move for CVS. Even though that move sort of happened within the first 2 months, and then it's been moving sideways. Since the start of 2025, the stock has not moved. This purple line is the 200-day moving average. The stock, it did cross, well, it didn't cross. It intraday went below the 200-day moving average and then bounced off of that. It also bounced off of that a few days later. So we'll see if this is where it is currently sitting. We'll see, but I'm looking for a pullback, a bounce off the 200-day, and then continue to go higher. So $60 is actually below that 200-day moving average. So as long as we get that bounce off the 200-day moving average, you have a trade that's potentially can get you about 20% in a week. All right, so what we do every week is we look at sector rotation. So this is what we saw last week. We identified some sectors that might be a little bit overbought, being consumer discretionary, industrials, materials, utilities. We're all right around that 80% or more of stocks in those sectors trading above the 20-day moving average. Then we also identified some other ones based on seasonality, consumer staples, financials, in real estate that might have done well over the last week. So now we'll see how good our predictions were. So there's, I know a lot of drawing in this one, but so utilities, I said was utilities back here was 81%. Said usually when sectors are over 80%, that's time for a pullback. It doesn't always happen as soon as it hits 80%. Sometimes the sector overall goes continues to go higher because some stocks within that sector kind of help move the rest of the sector performance-wise. So utilities, we did say was a little bit overbought. Turned out utilities, I was kind of wrong on that one because it had 1.5 1.56% gain in 5 days, in the 5 trading days since the Monday. And it was actually one of the better performers. However, if you look at it, they gained 1.71% on Friday. So out of their 1.56% gain in 5 days, 1.7 of it came. So maybe I was right. I don't know. Right and wrong at the same time. And then materials certainly was one that we identified as being a little bit overdone, and that fell off by 1.3%. So again, just by reading these, this chart doesn't automatically mean, oh, it's above 80, I'm going to sell it. It just means if I'm personally looking for stocks, I have my watch list of stocks that I'm looking at for the week. If they are in some of these things like materials at 92% trading above their 20-day moving average, doesn't mean that you can't find winners. It just means that it might be a little bit more difficult to find the runners in that one, and you might find more luck in some of these other sectors that have been beaten up a little bit more. Again, depends on what kind of trader you are. Anyway, the other thing in purple here is I wanted to highlight the sectors that have been outperforming the market. So the S&P 500 has moved up 19% in 3 months, absolutely crazy. And only 1, 2, 3, 4 sectors have a better return than that. That would be consumer discretionary, information technology, industrials, and communication services. So again, in these types of situations, I'm trying to look for, especially when we're trading MTC and things like that, I'm trying to find stocks in sectors that are outperforming the S&P 500, and then trying to find strong stocks that are also outperforming the market. And if they can be strong stocks within a strong sector, even better. All right, so that brings us to this week. What do we have this week? Looking at the number of stocks trading above their 20-day moving average. Well, utilities, because it had such a nice Friday, I'm going to say. I won't, no, I mean, that's fine. I'll admit I was a little wrong on that one. Anyway, 94% now are trading above the 20-day moving average. So really, when we start getting into that 90% or more, I wouldn't be surprised to see utilities kind of pull back a little bit this week. I mean, unless there's 1 or 2 or a handful of really, really strong stocks that move the performance of that sector higher. With 94% trading above 20-day moving average, wouldn't be surprised to see that pullback this week. And healthcare just got really beaten up with earnings. Some of the earnings companies from some of these therapeutics and other companies last week had some pretty big moves lower. So you now see that sector having only 25% of their stocks trading above 20-day moving average. So that may, get I mean, it's not 20% or lower, but this is one that's now at least entering into my view, looking for a potential turnaround in healthcare. Maybe not this week, maybe not even next week, but certainly I'll be looking at healthcare a little bit more closely in the weeks ahead. All right, so seasonal trading ideas. Again, I wanted to provide a lot of value to these sessions, so I decided to also run one of my favorite scans looking for seasonal trades. If you want to buy or if you want to do debit trades, we kind of talked about CVS as a potential credit trade. These are all debit trades. So the important thing to note about seasonality is you don't just say, oh, well, it has a strong seasonal pattern from here until August, so I'm just going to go out and buy it. You still have to do your due diligence, still time your entries, all that sort of stuff. But these particular stocks all have a 90% track record over the last, meaning 9 out of the last 10 years. They have moved higher. Again, we talked about this last week. Season at what they don't tell you, or what a lot of people don't tell you, is that bullish seasonal moves tend to happen over earnings. And so you'll see that PSX has earnings coming up. They just tend to outperform their earnings, so they tend to do really well. So again, that's why you still have to do your due diligence, still have to determine what kind of trader you are. If you don't want to trade over earnings, then it doesn't really matter if PSX has traded higher 9 over the last 10 years. then you're still not going to want to trade this one. But anyway, these are just a couple of trade ideas. You can take a screenshot of those and see if that fits within your risk tolerance. But those are free trade ideas for a Monday. And I am now, that's it for me.
Bam, 30 minutes on the dot. We'll be holding a special happy hour webinar this Thursday at 4 o'clock. That invitation for everybody will be coming out a little bit later this morning or this evening. That will be held exclusively on Zoom, our webinar platform, not on the Traders Reserve Live platform. So when you get the email, make sure you register for that presentation this Thursday, July 25th at 4 p.m. Eastern Time. Again, held exclusively on Zoom. Our core focus, our topic in that happy hour webinar is fear. How we're overcoming that in the given current market conditions, with markets up, markets down, everybody waiting for the next shoe to drop. So we're going to lead with that, and then show you how we're working to overcome fear and to help you. And we'll also be sharing details on the Millionaires Trading Club live event taking place this October. So with that, we will see everyone again on Wednesday morning at 8:30 a.m. for our next Breakfast Club. Jeff, thanks for being with me. And for all of you, thanks for taking time out of your morning or your day whenever you watch the replay. We'll have the replay up in somewhere in the next 5 to 10 minutes. Thanks again. Have a great morning. Good luck with your trading. Income Masters and Millionaires Trading Club both meet today. Millionaires Trading Club at 11 a.m. Eastern Time. Income Masters at 12:30 p.m. Eastern Time. For everyone at Traders Reserve, I'm John Hutchinson. I'll talk to you again on Wednesday.